All right, guys, what is going on? Welcome to the stream. Who we got? Oh man, we only have 20 people on here, bro. Wow. Here I am giving you the low of the week. I didn't tell you it'd be the low of the week. Wasn't really thinking that far ahead, but you know. What about Euro? You remember we talked about these levels up here? Maybe we did. Maybe we did. Pretty sure those were equal the other day. I don't know how those are not anymore. That's chopped. Whatever. NQ made my week today, dude. I wonder if we talked about being bullish yesterday. Did I not tell you that I was bullish yesterday? And what's today? An up close day, baby. You guys doubt me? Do you doubt me? What about Dow? Remember I told you we didn't make a lower low on Monday? Yesterday was somewhat, you know, it was bullish. We actually had an up close day, as small as that is. But what's today? Up close, right? Oh, okay. Okay. Do you doubt me, chat? Do you ever doubt me? Are you like these haters? Do I need to buy another fucking Corvette? Know what I'm saying, baby? You gonna doubt John Phibb? Is that what you're gonna do? Wake up and doubt me? Don't do that. This was the inverted mitigation I told you about earlier. It was way after the fact. It was before we got that run. And look what it's led to. Hot damn. Hot damn, chat. That ain't fucking bad, is it? Well, technicals are fun. Technicals are easy for the most part. I mean, I do make it look easy. It's not always been that way. But remember, I've been doing this a long time. Now, why am I rereading The Disciplined Trader, and then I'm going to reread Trading in a Zone as well right after? Because remember, trading is not just being an analyst. You could be an analyst and not even be a trader. A successful trading career, right? A successful trading career. I've made several videos about this. This was also the very first in-person lesson that I ever gave at a conference, basically. Right? What are the 3 things that you need, chat? Do you remember what they are? What are the 3 things, the 3 pillars, which I did not come up with this, but I have named it the Successful Traders Trio. I do believe it's in Street Smarts. I think it was something that Larry Williams might have said. I might be wrong. But at least you know that it's not mine. This is not something that I created. Okay, but the reality is the same. Okay, and obviously we can take a look at this beautifully drawn, perfectly drawn house. Okay, that's your career. And the foundation to a successful career is what? What is it? While I do my intro, you can put your answers in to the chat. Felix, Robert, Mason, NKM, Marshall just passed their combine. Beautiful. Drop some celebration / birthday emojis for Marshall, who passed a combine. Is it your first one, or was this another one? Let me know. What's good? Mitch, Naruto, Sean, Gessner, Willow, Robin, Jordan, D, Jim Bob, Remy, Gavin, YH or YM longs this morning. I don't know what YH is. I don't know what that is. First 4-figure day since I started 7 years ago, says Gavin. Well, fuck, man. Drop some more celebrations then for a 4-figure day. Where is it at? Shit, where's it at? First 4-figure day in 7 years, says Gavin. Drop some more celebration. Whole lot of celebrating going on in the SMS community, huh? Look at that bitch. We're still rallying, bro. Who's your fucking daddy, dog? Who is your daddy, chat? Come on, baby. Did I not say I was bullish yesterday? Come on, man. Come on. We're fucking winning here, dog. What's good, Jonas? Bitcoin. Fuck Bitcoin. All right, that's what I think. I don't even look at it. What's good, George? TLT bonds. I don't look at that shit either. You guys ask me about shit I don't look at. I don't look at it. What's good, Stasco? What's good, Shay? Right. If you take out one pillar of the triangle, it will collapse. Yes. Yes. Whole lot of celebration. What's good, Paj, P, whatever it is, PJ. I just gave you like 3 different names. Welcome to our live stream. Okay. But the answer to the question, right? What to have a long-term career in trading, you need, number 1, your edge, which is your strategy, buy low, sell high. Number 2 is risk management and money management, right? Small win, or not small wins, small losses, small to big wins. No big losses. That's all in 48 laws of trading as well. And the third thing equally as important, the trading psychology. You need the psychological skills to implement the edge and to implement the money management. Without all three, you're done. You cannot have 2 out of the 3. It's not like, oh, that's good enough. It's not. Okay. You can have all the greatest psychology in the world. You can execute an edge wonderfully. You know, you could take the bias that I give you and make the markets your absolute bitch. But if you over leverage and you end up taking a loss or 2 losses, you could end up burning an account. So no matter how you look at it, no matter how you mix and match it, okay, like your socks, all right, you need all 3, and there is no, that's a law. Okay, there you cannot violate that law. All right, I can't, you can't, none of us can. It's the law. So by having that, right, where am I going with this? That's why I wanted to start, I guess, Q2. I didn't time it that way on purpose, but now that we're in Q2, I did want to start going, okay, you know the technicals, you know the models. I've given you models. I gave out a free model last week, the Judas model, right? Which a lot of you are liking now. You're like, oh my God, this Judas model's fucking nasty. Yeah. You know what I mean? It's nasty. And if you over leverage the Judas model, you might end up hanging yourself. Hanging that account. Some of you might get that, some of you might not. But I'm going to move on. You know the technicals, right? Risk management, I talk about the least amount, because if you consistently risk 1 or 2% or less, then you're probably never going to blow an account. So that's at least like somewhat of a safety net. Obviously, risk management and money management, we can go a lot more in depth with it, but I focus on that the least. I like technicals. I've always been like a, hey, let's learn how the markets operate kind of guy. I've always been that way. Edgar gets it. And the psychology side, I wanted to dive a little bit more into, because you may know technicals, you may know your models, market maker models, Judas model, imbalance model, inversion model, whatever, inverted mitigation model, all that stuff. But if you don't know how to implement it properly, then, you know, that needs to be tweaked. Let me ask you that, chat. The chat's open to the subscribers today, by the way. So let me ask you that. And let's do a vote, so that way nobody feels embarrassed. Let me just move this over real quick. Just type this up for a second. This will be our poll for today. Do you feel like, oh shit, I spelled that wrong. Do you feel like you know technical analysis well, but still struggle to execute trades and or perform well? Oh fuck, that fit perfectly. Okay, that's what she said. Do you feel like you know technical analysis well, but still struggle to execute Felix to execute trades and or perform well? I'm gonna change this real quick just so I can fit that. Okay, perfectly. Done. Yeah, see, sometimes I'm funny, chat. Sometimes I can be funny. All right, there's your poll. Go vote. Go take a vote. Do you feel like you know technical analysis well, but you still struggle to either execute trades and or perform well? Maybe you feel like, you know, John, I'm predicting the market, not 100%. Like sometimes I still get it wrong or whatever. Or sometimes trades take a little bit longer to pan out, British pound and euro, you know. But I feel like I should be performing better. I feel like I'm underperforming. I should be a lot further than I am. Like, you know, I'm starting to kind of get frustrated a little bit. You know, drop some votes. And we got 18 votes, 47 47 viewers. Let's see if we can get to at least 20 or 25 votes on that. Okay, while that comes in, you know, and it's okay, bro. I mean, because even myself sometimes too. All right, I was bullish today on indices. I didn't trade in here. You know, I still have like stocks and shit, which isn't, you know, all that big of a deal, right? But I didn't trade this. You know, I'm not up on it on the future side, at least. If we go to currencies, right? British pound, what do you remember from yesterday? Remember, we talked about 29.40. We talked about price potentially running that low and then running to the 29.40s. Well, guess what? It didn't do that, did it? Not in the way that I would have liked it to. I can't go back and change history. I can't go back and change what I told you, but that's what I told you, right? So what happens is we get, I think this is Asia in here, and then we rally a little bit and then we drift. So then London comes around. London open is here. What do you notice about that? What does London do? 29.14 is London open, drops down, takes what? Asia low. One low, two low, three lows. London open, manipulation of Asia's low, and then on again based on a 15-minute time frame. And one of you did share this earlier in the Discord. That's the Judas model right there. I gave you this target yesterday. Yesterday. 24 hours ago. Right? Which was way ahead of the move. Send that to the back. 1, 2, 3 formation, imbalance. We trade through it, back into it. That right there, quite literally, is the Judas model that I gave you for free last week or 2 weeks ago, however long it's been. My perception of time is chopped. Drop a like on the stream if you guys like that shit. I'm like telling you where I think the market's going to go before it goes there. You just have to pay attention to the opportunities. I'm asleep during London, bro. I can't take something like that. I can't take something like that. But I know some of you trade London. Like, is that not badass, bro? Don't lie to me, chat. Don't lie. You know you love this shit. You know you love it. You know you love it. Well, John, I don't really look at a 15-minute time frame. Okay. Neither do I. I'm with you. Not for the most part. 5 minute. There it is. One of you in the Discord asked yesterday, what time frames do I look at for the Judas model? And I told you all of them. And then I also said, but 1 minute and 5 minute that's what I like. Hell, that would have gave you a much better entry. Same lows. 1, 2, 3. Inversion. Done. Right up. Rocket ship. Fucking Elon Musk. Rocket ship straight up to 29.40. Like I told you. What else do you need, bro? Cameron caught British pound and Dow today. Yeah, you're nasty. You're filthy. That's disgusting. What about Euro? Okay, Euro yesterday really just will make you want to just take it off your watch list, but we do end up getting some manipulation at London's open as well. Pound is higher. Euro is slightly higher, so I don't really think we don't really have much of a divergence here, and we do end up having a much deeper retracement. But again, that level was pointed out yesterday. Now, mind you, Euro was shit in my opinion. We consolidated way more than we needed to. I don't like that. I despise that. But still, those highs were, I told you about that. And look, we ramped it up today. That's beautiful. And then we even obviously extended for the high of Monday. See that? That's just good trading, chat. I mean, that's just good trading. Euro higher, British pound higher, indices higher. Pick your poison. Which one do you want? You know what I mean? Like, which one do you want? Lower low at our just prior to the open today, equities open, right? Slightly lower low on NQ, slightly lower low on ES, and a higher low on Dow. That should have told you everything you needed to know. Now, I was watching Nasdaq. In hindsight, Dow did offer a opportunity here. And again, there's only two reasons why I say that. I have a lot of responses from what I talked about yesterday on my Instagram story. And a lot of people are sharing their opinion, which is what I wanted, but I like keep getting them. My shit is blowing up. Blowing up. Anyway, if we come back here, consolidation here, minus this wick, these, or I guess at least this up candle with this gap here was a level of distribution. And I only know because I looked at this already. So if you include that up candle here, like with this gap, I probably wouldn't do that, to be honest. Like if we were to just do that, I think that's a little that just doesn't seem right to me. I'm not going to argue with it though, but that overlaps with the two imbalances. And also, like I mentioned yesterday, when you have two imbalances, what do? We trade the higher one, stop at the lower one, and that would have really served you well for Dow, because look at that. Look at that. If you pay attention to the rules, if you write down like shit that I'm telling you, bro, you're going to smack it. What's good, Scott? You're going to smack it, bro. Think about it. How many times have I told you this? If you have two imbalances, take the first one, stop at the second one. Look at that. You gonna argue with that, bro? You just add a small reaccumulation on top of that, you're done. You're done. Days like this, again, even though I didn't trade it, I was looking at Nasdaq. In hindsight, if I could go back, Nasdaq, YM was it. At least as far as opportunity goes, because NQ didn't do that. NQ had like 5 imbalances. Oh yeah, take the first one with a stop at the 5th one. What type of shit is that? You know, I'm not doing that. So I was watching that, and you know, we did not get the same retracement on NQ. So YM was the one that did offer an opportunity. So that's why I'm going over it, which is beautiful. I mean, this was awesome, but you know, couldn't grab it. The higher low, right? That's the one that's under accumulation. The others were under manipulation. What accumulates typically will mitigate, and that's the function right here. Come on, bro. Come on. You guys should have like your own book based off all the notes I've given you the last number of years. Gavin said, I can't tell you how helpful trading the first imbalance stop below the second one has changed my game. No more fear of missing out. Yep. That's what I'm saying, bro. You see it over and over again. And now you trust it, Gavin. Right? Because you've seen it so many times. And it's not this, and this is kind of where we transition over into the psychology side. You've learned to trust it now. But you also know everyone won't be a winner. Every once in a while, yeah, you'll see two imbalances and you'll trade it and then you'll get stopped out. And you know you're not just gonna give up on it. Oh, this is bullshit because it doesn't work one time. No. No, no, no. You know that out of a series of 20, 30 trades, you're going to lose anywhere from 1 to 5 trades or something, maybe even more, you know? But as long as you're managing risk, holding the winners, we talked about this yesterday when it came to the equity curve. Remember the three? We had the consolidation one, we had the steady higher one, and then we had the lower one, right? And how typically we start trading like shit, and then we eventually get improvement to where we become break even, and then all we have to do after that is to continue on the improvement, not just trading but personal development as well, to eventually get to that point where you can go, okay, I trust my edge, I'm holding winners, you know, I'm not trying to take dumbass shit. I'm not trying to take dumb trades. You know, I'm only focused on high quality setups only, and I'm saying no to all of the other setups. Even if it would have won, it doesn't matter because it doesn't fit my criteria. You know what I mean? And that's how you go from what you don't want to be trading like to seeing results, but not maybe being able to pass a combine or a challenge or grow an account, to finally going, okay, now I'm focused on the long run. I'm not focused on the little blips of losses. And I know my equity curve will grow over time only if I hold winners and stop trying to hit home runs. Can we get a home run once in a while? Absolutely. You've seen me do it. In one of the earlier trades this year, or maybe it was last year, because again, my perception of time is chopped. But remember that Dow Jones trade I took and I captured almost the entire day's range? Yeah, you can do it. But that's not every trade. And that's not the point. At the tail end of our discussion yesterday, we talked about that. Remember, if our goal in anywhere from 3 to 5 years, or maybe 10 years from now, is to manage other people's money or to become a trader for like an actual entity, you know, what are they going to want to see? And they're going to want to see this steady growth, not anything else. Steady growth. And they'll go, okay, I'll take you seriously. Do you know how to hold winners? Do you know how to cut losers? You know, emotions really don't matter as much as actions. Okay. Your actions are what matters. You could have longed this imbalance here, and you could have been grinding your fucking teeth or nails. You could have been biting your nails all day long. But if you hold that winner, you're going to grow that account. I can tell you, sometimes our most emotional trade can be like the best one. And I say that because if you're impatient and you don't know how to hold trades, but you finally hold on to it, again, just like Mark Douglas talks about, as soon as, like if you're long, for example, as soon as you get a down candle, that's when you start getting nervous. Oh shit, what if it comes back to my entry? Oh, we fly higher. Oh, now I feel great. This is awesome. John Phibbs is the GOAT, right? And then it's like, oh, wait a minute, we're trading lower. Oh, I'm scared again. What if it comes down to my stop? Oh, no, it's back up again. Oh, yep, John's the greatest. SMS is awesome. This is wonderful. And then every down tick, oh, I might be wrong. I'm shitting myself, right? Oh, never mind. I'm euphoric. I'm the king. I'm the GOAT. I'm getting a Corvette next. I'm going to go race John in Houston, right? And then boom. Oh, shit. Oh, man, we just made a lower low. we broke structure. Oh, no, we're going to sell off. Nope. We trade higher. And you're fighting those emotions. You're fighting those worst case scenario too. What if it magically comes all the way back down to my entry? Knowing damn well yesterday I told you I was bullish on a higher time frame. why would it do that? I mean, it can, of course. It can. Don't get me wrong. I don't think we're going to do that from up here. But in certain situations, yeah, sometimes it'll come all the way back down to your entry. We covered that too, taking partials. But the most emotionally draining trades can sometimes be your best ones. That's why I say that. So, and yeah, I like Top Step. They're cool. I mean, I wouldn't have bought their hoodie and their hat if I didn't think they were great. Omar, I'm not shorting today. You could not pay me to short today. I'm not shorting. It ain't gonna happen. Again, I'm bullish on a higher time frame. Why would I short? I'm not doing it. I'm not doing it. It ain't gonna happen, Captain. That's good, Toby. Never cut winners, but cut losers. I mean, in a general sense, yes. But there's a lot of technical analysis. There's a lot of psychology and a lot of risk management that goes behind that statement. So the statements, they sound good. They're even mantras. Buy low, sell high. It's a mantra. But what defines low and what defines high? And then that's when we get into the arguments of, well, the lower time frame might be bearish, but then that gets blasted through, you know. And again, I respect Casper, you know, I do. I think he's very transparent, and like, yeah, the whole drug dealer shit was pretty fucking wild, but I'm not judging him, you know. I'm not. This was something that he shorted, I think, if I read his post correctly on Twitter. So he lost money shorting this as a mitigation or as a break or whatever they call it. And so he got that wrong. But even before that high got taken, I told you that this was an inverted mitigation. That got traded through. And if it ain't bearish, it's fucking bullish, right? And I'm not trying to call him out. It's just, you know, I take losses too, obviously. But that's my point. The smaller time frame might look bearish. Oh yeah, we rallied, we're above the open, you know, oh, we got a shift in structure or whatever. And that's, again, this is why I tell you, breaks of structure, everybody puts so much emphasis on that. Well, if that's a break of structure, why the fuck did we go higher then? Oh man, I don't know. The fuck you mean you don't know, bro? I told you yesterday. Higher time frame was bullish. What are we doing shorting? You know what I mean? If anything, if you're bullish, you want to see bearish concepts fail. Right? Anyway, I'm losing the point. Coming back to the point. Buy low, sell high. It looks bearish in the short term, in the smaller time frames, on a 1 minute, 5 minute, sure. But again, if we zoom out to the daily, look how much we've already dropped. Okay, 22,000 and some change, all the way down to 18,900. I mean, 15% in a month, roughly, right? We took out that old low, got a divergence with Dow Jones. That's bullish. So I would absolutely not expect a small time frame short like this to hold up. Why would it? That's not low resistant lows. That's high resistant lows. That's a stop loss. That's not a target. So everything is pointing in the opposite direction. So this would have been a good case study. Remember that video I recorded? One of you disliked the fucking video, by the way. I don't know why you guys do that. Whatever. And I did the same thing. I shorted, got it wrong, got out of the short, then went long, and, you know, it traded higher. I switched my bias and traded it in the opposing direction. That would have been a good case study here. Oh yeah, we can short it. It looks bearish. Oh shit, it got traded through. All right, that's going to become an inversion then. Let's get out with the loss on purpose because it's going to be a small loss. And then let's go long instead. Get our loss back plus some, equal highs here, boom, in, out, done. But again, that's a very elite level of trading. Hell, I don't even trade that way most of the time. You know, I'm a one and done kind of guy. I'm like, hey, let's wait for something and then trade that and let's go, versus switching my bias and then trading in the opposite direction. I typically don't like doing that. I just don't like doing it. I'd rather just try and get it right the first time. So, but anyway, does what I'm saying make sense? Or do you guys think I'm just kind of rambling on here? I'm trying to tell it to you like it is. I really am. Otherwise, I wouldn't be right way more than I am wrong when it comes to you know, things that we talk about, bro. I gave you all the levels yesterday. I didn't give you this, but this was a later markup. But it's like I literally told you yesterday I was bullish in a higher time frame. London took us lower. London was the finesse session, and then guess what? We came right back up. It's hard for me to find the sweet spot between taking too much and to less partials. Well, that's what I'm saying, Felix. We cannot be a perfectionist. If you're a perfectionist in trading, you're never going to be satisfied until you take something like that Dow trade that I showed you last time. In at the low, out at the high. But even then, that's not every single trade. It's not. So the midpoint between trying to catch an entire objective or an entire move and a break even is to take partials. So the solution is not perfect, but the solution by taking partials is growing the account. And that's the whole objective. Does that make sense? We're not looking for perfection. We're looking for progress. Yeah. So, account growth. That's the goal. Growth. Not hitting a leaderboard. Not buying a Corvette. Not showing off to your childhood friends or whatever. Okay? Not trying to prove why your teacher's wrong. Okay? That's the wrong... As someone who does that, okay, that's not the right way of doing it. That's not the right way. The goal is growth, not leaderboards or to buy cars and houses and whatever the fuck. That's not the goal. All of that is a byproduct of growth. Does that make sense? Emotionally draining is getting stopped at the low on ES after taking a 1 and 5 minute inversion and thinking you're about to come up today. Yeah. Let me see. Never cut winners after break even and profit taking, but cut losers. Right. And that's another battle too, Jonas, not over managing your trade. I've done that too. I've done that probably more times than you would even believe. I've done it too. You've seen certain recordings where as soon as I get like in the green, I'm break even. And then it looks like it's going to get stopped out. It doesn't. And then it goes my way. I'm not going to lie to you, bro. Some of those videos that I've recorded on my trades, I did move my stop too early. I just didn't get stopped out. But in the way that I teach you and in the way that I primarily trade, sometimes those trades I do go break even too fast. But it just so happened to work out. You know what I mean? Versus other times, like in the last video I think I recorded was the Nasdaq. Hell, I didn't even have a fucking stop loss. Not for the first few minutes. I put it in later. You know? But the whole point of that is to show you entries and to show you, you know, trading in the direction of opposing liquidity. So as long as we take partials, we're good, and that's it. I mean, again, it's not the perfect solution. because again, like if we use Dow as an example still, you know, you might get in here, let's say, I don't know, let's just say here, new high, you partial one, London's high, I think is here. London's high, you partial a second one, and then previous day high, I think is here. So maybe you partial, you know, one more. And let's say the market is up here, like right at the beginning of the PM session, like it's up here. And you look back and you go, oh man, well, this is stupid. Why did I partial down here and here instead of holding all of them for up here? It's like, well, bro, the market doesn't always go way up there like you think, you know? So it pays, right? We're growing the account, you know, no matter what. Partials pay 100% of the time. Does it grow your account exponentially? You know, no. But again, it still grows your account. And again, that's the goal. But it is up to you. If you want to be all, I said this yesterday, if you want to get all in and try to, meaning like your full position, and then you want to hold the full position, excuse me, all day, I'm not going to stop you from doing that. I've done it. But you can't then come back to me and be upset when you're all in, market goes your way, you're up nice, and you get greedy and you're like, nah, fuck that, I need more. And then it comes back down to either break even or you take a loss. And now you're going to be upset. Well, like, damn, I had it, I didn't take it, and now I get nothing. The rules by taking partials prevents that from happening. I've recorded trades like that too. I'm in, market makes a new high, I partial, and then get break even on the rest. It's like, okay, well, clearly I was wrong. But guess what? I still gained, right? Still grew the account. It may not be by much, but I mean, do some math. If you make 0.5% or even 0.25%, you do that 10 or 20 times in a couple months, that adds up to a quite big percentage. You know what I mean? That's why we have to continue to think long term. It's not about Monday. It's not about Tuesday. It's not about January. It's not about February. It's not about Q1. It's not even about 2025. It's about the next 5 to 10 years from now. You see what I'm saying? Long-term wealth. What's fast doesn't last. What's slow will grow. Okay? I'm trying to tell you. Not to keep throwing this Corvette in your face, but bro, what's fast doesn't last. What's slow will grow. Okay? I didn't just decide, you know, to put on one trade to go buy a brand new sports car. That's not how it happened. That's not how it happened at all. Okay? It took planning, it took preparation, you know. It took a little bit of time to build up and do something like that. Okay? So you can listen to me, you can ignore me, it's entirely up to you. But you're going to do what you want to do at the end of the day. Okay? But anyway, that's pretty much the most of what I wanted to cover. We already talked about Euro and British Pound. We already talked about the indices. We already followed up with a bunch of stuff that we talked about yesterday, as well as, I guess, last week. Partials is possible, except with a 0.01. I mean, yeah, if you're trading a 0.01, bro, I mean, come on. Put more than fucking $5 in a trading account. You know what I'm saying? Or like even like a funded account. You know? What are you doing with a 0.01, bro? Come on. Put some fucking size on. I mean, if you're trading a 0.01, you might as well just go into a demo and take a 0.1 or 1.0 and practice taking partials. So by the time you get there, you're already used to it. You're better off doing that, honestly. Yeah, Mason, that's a good point. So Mason said, let me put this back over here. I feel like it was kind of far away. Mason said, when I go break even too fast, it's usually because I am uncomfortable with the risk or taking a trade I probably shouldn't be taking because it's not high probability. That's my point. We talked about that yesterday. One of you had asked about, it might have been you, that talked about accepting the risk. You're accepting the risk, taking a bad trade or a low probability trade. There's problem number one. You know, you're by trading a low probability setup, that's bad. Okay. And then number two, you're assuming the risk on a bad trade. That's not good either. And then by doing that, even though emotionally you know it's wrong, you still do it, you're reinforcing that bad habit, which is not good. It's not good. Jonah said, in logging out of that account, that's what helped me keeping my profits. I mean, you could, whatever works. You know, if you take partials, again, coming back to this Dow example, if you take partials once or twice and then you're break even and you told yourself at the beginning, like, hey, I'm going to hold for the rest of the day. Okay, then log out and come back at the end of the day. You know what I mean? And then don't even look at the market. I've done that. It's like, okay, I'm off the charts. I'm off the Discord. I'm going to go buy some donuts or whatever. The pink ones with sprinkles on it. You know what I mean? And just go hang out and I'll come back later. And that served me well in some cases. In some cases it didn't. I ended up breaking even, but again, nothing's 100%. Nothing's ever perfect. Only my exes. Those are the only ones who are ever perfect. The only flawless people on earth are just my entire list of ex-girlfriends, okay? So you figure out how the fuck that even happened. Because I'm still trying to figure that out too. I've realized just being patient for something very high probability and completely accepting risk is the way to go. Right. Right. There it is. Trading and learning doesn't always have to be so profound. It doesn't always have to be the quotes and the books and, you know, the gems, right? Sometimes it's just that simple. Be patient for high probability trades and let everything else go. And when you find that high probability trade, just accept the risk. If you can't accept the risk, then downsize. If that doesn't work, then go fucking demo. Go paper. It's okay. Lebright says, my best trades are when I move my stop to break even and let it go. Exactly. That's what I'm saying. And yeah, 2020, I covered that a little bit yesterday. That's what accepting the risk means. Where it shouldn't matter all that much whether you win or lose. You know? Because again, it's the grand scheme. It's about 20, 30, 40, 50 trades, 100 trades. You know? Trades you're going to forget about in a week or two. You know? I don't remember every trade that I took. It's impossible. I remember certain trades, you know? Like the one that got me funded or whatever. Or a certain milestone in a trading account. You know, I remember a couple of those, but I couldn't outline every trade I've taken in the last 3 years. Hell no. It wouldn't happen. But yeah, you accept the risk. What's a good amount to start a funded account at? So with Top Step, the lowest account is a 50K combine. And then if you do get funded with the 50K, you really only get 2K of risk. So, you know, I haven't made a video about that yet. I told you I would. I haven't done it yet. But, you know, at that point, it just becomes about breaking it down. Breaking it down into a point where you would not lose the account. Even on a losing streak. I'll give you an example. Do you guys want an example of that? Do you guys want to know how to never lose a funded account? Is that something you think would be worth learning? Now, obviously, that's the idea. You know, obviously, there's a few things that are unknown, of course, but basically, like to get funded and to stay funded, like how to not lose your funded account. Is that something you guys want to learn? Part of me thinks you're not going to like my answer. I don't really care, to be honest with you, but I feel like some of you might be like, this is kind of stupid. But I'll tell you. I've told you before, but I'll tell you again. Let me take a swig of this Mountain Valley real quick. My insurance bill is due in a couple days. Nice. Just got that text for some reason. All right. So, let's delete all this. How to not lose your funded account. Now, I'm going to be using the idea of a Top Step combine because that's what I have. That's what a lot of you have now or are trying to get past, 50K, 100K, 150K combine at Top Step. So I'm going to use them as an example. Okay. Again, well, technically this would work for a funded for a combine as well, like trying to pass the combine, but also getting the account and not losing it. It would work the same way. So if you go back to the 48 laws video, and I think it was the law of risk or something like that. Let me look this up real quick. My computer has so much stuff on it. It's going to take forever to look this up. It's in the risk management portion of the laws, and I'm looking for the PDF. I don't know where I put it. This is bad. Okay, you know what? Fuck it. I'll just tell you. So it's one of the laws. It's like the law of drawdown, I think, if my memory serves. So if we have a 50K combine, what you have in order to lose that account, okay? This is the maximum that you would be willing to lose total is $2,000. Okay. So when you get a 50K, and mind you, this is just one. Okay. Obviously, if you had multiple, you'd have to multiply that number as your total. But if you connected your accounts, it would still be the same because the accounts are connected. So, for example, 50K combine, you pass your combine, and then you get funded. Boom. 2K total risk. That can be broken down into several ways. Now, the rules might have changed, but I know at least from what I remember, they give you a $1,000 daily, meaning in one day, if you lost, let's say your very first trade and you took $1,000, you like shorted, Dow Jones this morning and you just got your face ripped off. As soon as your P&L went negative 1,000, it would be auto closed and you'd be locked out for the rest of the day. The next day, let's say for whatever reason, you did the same thing. You took a stupid trade, over leverage, no stop loss or whatever. And then boom, you lost another 1,000. You're done with the account. In 2 trades, you got cooked. Okay. How would you prevent that? Well, you would have to take less risk. Now, again, if we take $2,000, we would have to break that down into a bunch of different ways. Okay, so what do I mean by that? It means you could have 1,000, right? 2 times. It means you could have, let's space this out. It means you could have 500 4 times. You get where I'm going with this? You could have 250 8 times. If my math, I mean, my math might be wrong. You could please like double check me, of course, but you know, or you could have 100 at 20 times, basically. Right? Now, what we're talking about here is consecutive losses. Okay? Consecutive losses. Which means $1,000 twice, you're cooked. $500 4 times in a row, you're cooked. If you risk $250 and you lost 8 times in a row, you're cooked. Or if you risked $100, you'd have to lose 20 times in a row and then you'd be cooked. Now, if you lost 20 trades in a row, let me buy your next combine. Okay? Because all you'd have to do is the opposite. I'd be impressed if you lost 20 trades in a row. I honestly would be. My jaw would hit the floor. I'd be like, how in the fuck? How did you do that? That's crazy. Okay? Because that's a whole new level of consistency that you guys probably, we're not even ready to have that discussion. Okay? Now, this is, obviously there's more numbers. You could do 750 a few times. You could do 300 a certain number of times. You could do 150 a certain number of times. This, in any case, is consecutive losses where your amount does not change. Okay? Your amount does not change. And thank you, Jim. Law 22, always respect the risk, the law of risk. Check yourself before you wreck yourself. Set risk rules for yourself and follow them. Set weekly, daily loss limit, max number of trades, max risk per trades. I don't think that was the one I was referring to, but that's still a good law. Now, what I'm telling you to do, obviously the lower amount of risk you go, the higher number of trades that you'd have to lose in a row to blow that account. So if you have a 2K total risk, if you, based on the math, if you were to stay between $100 a trade to $250 per trade, somewhere in there, 125, 150, 200, maybe even 250 at the high end. Okay? If you stay within this, you probably won't lose that account. Okay? Now, here's another idea. I'm not saying that you can't do, well, let's back up. I'm not saying you can't do one of these. You want to take a $500 trade on your first, or $500 risk on your very first trade? Listen, you could do it. You could. The problem is if you lost that, you've got 1,500 left. What you would then need to do is obviously size down, right? Risk down and go to 250 or even 100 until you recoup your loss. And then you can, you know, go to whatever you want. So in short, what I'm saying is how to never lose an account. Okay. If you were to take the rest of these numbers, because this is a live stream, I don't want to be here all fucking day. You don't want to be here all day either. Fill out the rest of this number in an Excel spreadsheet. Okay. And what you would do is just move your way lower for every losing trade. Does that make sense? You would, every time you lose in a row, you go down. So in this hypothetical example, if you lost 500 on a trade, then you go down to 250. If you lost 250, then you go down to 100, right? So you're decreasing risk for every losing trade. So that way you never run into 2,000 total. Okay, drop some threes in the chat if that makes sense to you. It's just math. That's all it is. It's math. So in theory, if you want to call it that, I guess, in theory, your equity curve, okay, let's do this. Your starting balance, right? Your starting balance is $0 when you get funded. Your max is, again, this is just for the 50K combine. I'm not going to go over any other account sizes or nothing like that. You can pick up what I'm putting down here. All right. Your total risk before losing that account is 2,000. So what we would like to do is clean this up a little bit. Okay. What we would like to do is, if our account balance goes down, right, and then down again and down again and down again. Remember, it takes 4 trades at 500 to get clapped, or 2 trades, right? 2 trades at 1,000 each. That's clapped. But you could kind of see the rest of it, right? The rest of this math, okay? So at, what do we say, at $250 of risk, it would take, I think, 8 trades in a row to do that. So in order to prevent ever getting here, we need to take a smaller loss after every loss. So let's say, boom, we lost 500 on our first trade. You took a dumbass setup. Okay, it's not terrible. All right. Then let's say you lost 250. Okay, not bad. You're still going in the wrong direction, but it's not bad. And then let's say you go to 100. Now you lost only 100. Right? Let's say you lost again. Now you lost 50. So it's like a little bit less. Right? What you're doing here in this hypothetical equity curve is you're smoothing it out. Okay? You're smoothing out the equity curve to where you want to avoid losing 2,000 in a row, right? So let's say you've lost a number of trades and now you're at $100, you know, every time. Okay, you hit a nice 1 to 2, 1 to 3, you're back up again. Okay? Maybe you take 2 or 3 good trades in a row and you start to, again, like, grow that account, right? Once you're able to get back either, you know, close to your starting balance, or maybe eventually, you know, you take a few more trades, maybe they're like smaller winners or whatever. I mean, this is, again, this is all hypothetical, but let's just say eventually you get back to your starting balance, or maybe, whoops, maybe even green. You know, at that point, you can start to scale back up again. Instead of staying at 100 or 200, you can go back up to 300 or whatever you want. But as long as you're in the negative, right? Because obviously being positive would be in the green, which is where we want to be, right? And being in the red is negative. That's where we don't want to be, right? Our curve, in order to never get stopped out again, based on the math, we need to decrease risk after a losing streak, either 2 or 3 trades in a row that you're losing, decrease risk. And you're in a real world scenario, right? If you were to somehow copy this over and over again, Let me see if I can do that. Okay. Every time you're on a losing streak and you decrease risk, you never get to a 2K total, right? Now, passing a combine is slightly different. You could use this the same, but the passing a combine, you have a 2,000 trailing risk. Means like once you're green, this total risk goes up like with your gain. So this would go up as well. But in a funded setting, I don't think it does. I don't think so. Once you're green, I think like you're green. Okay? So that's it. How to never lose your funded account. Never get to your total amount is by decreasing risk. Okay? That's how that works. That's how you keep your account. So you never lose it. That's the theory. Okay? So, you know, if one of you ever get funded and then you lose it, you know, don't come to me saying, oh, John, I thought I'd never lose my account. You can definitely lose a funded account. Okay? If you follow these rules, you probably will not. All right? So, you guys good with that? Drop some 4s in the chat if you learned something today. This is more of like the money management side. I wanted to really get in the psychology side, but that's okay. We still need all 3, chat. You still need all 3. If you work with the money management, if you work with taking good trades, if you work on your psychology to implement the strategy side and the money side, then this is what you get. Okay? Now, if you duplicate this over and over, right, you can obviously tell what would happen. What would happen if we kept duplicating this? Shit. Give me a second here in closing. What would happen if we did this over and over and over again? What would happen in the long run? Look at it. Even though this trader is like, it looks, this is kind of a shitty equity curve, right? But if you were to duplicate that over and over and over again, guess what? In the long run, that's what it's about. Your starting point was 0. In the long run, that's the difference. Okay? And that is the point that we want to be at. Not trading for today, not trading for this week, or for this month, or for this quarter, or for this year even. You know, this could be 5 years down the road. This could be a year down the road, whatever the case may be. You're right, Naruto. Higher time frame equity curve, bullish. So, Felix, what do you mean how to scale up again? Once you're in the green, you can go back to full risk. Or even like, you know, greater. Once you're up, you know, let's just say $1,000. Okay, well now instead of taking $100 or $200 a trade, you know, now you could probably size up, go 300 or 400, you know, per trade. When you're playing with house money, if you will, if you're adding risk, you're not adding percentage risk, but you're adding money risk because you're growing the account. 1% doesn't stay 1%. If the account goes down, 1% becomes a different number. If your account goes up, 1% is still a different number, right? So it's all based on that, right? 1% of $100 is going to be $1, but 1% of $120 is going to be $1.20, I think, right? That's how you scale up. So you decrease risk when we're in the red. You can increase position size, but not percentage risk when the account is growing. Okay? It's a lot of rules, it's a lot of ideas, it's a lot of, you know, little nuances and stuff, but it is what it is, bro. I don't make the rules. I didn't invent math. I didn't invent the markets. You know, we don't change the market. We can't change the market, but we can change ourselves. And that's how I'm going to end that recording. So I'll have to go back and edit it, obviously, but I'll put out that video probably later, you know, how to never lose your funded account, you know, based on the math at least. So at least for those of you that are here, you got it for free. I'm probably going to make it a members only video though, just to have like those little snippets from the streams and stuff. So after your first payout with Top Step, they canceled a maximum loss limit. I don't know. You could ask Ricky. Ricky would probably know. Ricky would probably know the answer to that. All right. But y'all be good, be blessed. And oh, it's Wednesday. Yeah. So I will not see you tomorrow. I'll put out the market review tomorrow, but I'll see you again here on Friday the 4th. Okay. So be good. I'll see you then.
Fire in my chest, bitch, I'm on my ones, but they ain't gon' test. I stay cut by the wires of the nest, tryna find my ways in a bulletproof vest. I lay dogs in my fine till I find myself in the middle of the same old mess. I stress everybody dead. Who the fuck is next? Get set, pussy boy. Who the fuck wants that? Okay. Hey, gang, bumping at a pussy boy for the no grave. Bitch, I'm real on the way. Running through the dark like a page. If you play, blood, put him in his place. Oh, they ain't safe. Never got time today. That's how I love when these others are designed to stay. If I try, motherfucker better hide the face to find a race. These pussies don't lie, but they just like hitting my phone like you ever gave a fuck. But it can't been through when I jump through hoops just to make a rubber motherfucker is. But it is what it is. Pussy ain't natural, no clue. All that I lost to that sacrifice, I don't repose to the truth. Brick by the brick, bitch, up putting together a paradise fighting as they get the tooth.
I am free. Every single thing that I've done, I decided to do. My actions are governed by nothing but my own free will. Do you want to know what I hate more than anything else in this world? Anyone who isn't free. They're no better than cattle.